Satish Pai, the MD of Hindalco, joins us now on the show to talk about these numbers. Mr. Pai, good morning and thanks so much for taking out time. To start with, LME prices have only gone higher compared to what we saw when we last spoke as well. And what's more, even the volume of aluminium that you hedge has gone lower. So you will see better pass through. Tell us how LME prices have gone up and reflected in your top line, and what have your average realizations been?
So, for the Indian aluminium business, the LME is the main driver. So, in Q1, the average LME was $2,399. So, it was significantly up compared to the 2000 odd it was in Q4. And then when you look at the month of July, it has averaged closer to $2,600. So, I think that the LME continues, as you say, to show resilience and strength. And I think that's because the supply and demand is very tight. And the demand has been very strong in the supply side. There has been no real increases. And in fact, there have been actually decreases because in China and Yunnan, the hydroelectric power was reduced to the smelters. Rio Tinto's smelter in Canada has gone on strike. So there have actually been supply side curtailments, which has kept the LME very strong.
You're spending big time on increasing capacity for downstream aluminum products. This quarter, VAP was almost 27% of your sales. So how will this increase going forward, and how will it change the average margin profile as well?
So, as we have said, that it's at 27% because we produce about 1.3 million tons of aluminium and we are roughly at 300 KT of value-added goods. We want over the next 5 years to convert 300 more. So we will be at 600 KT of value-added products. And that is really our strategy because, over the next 5 years, the LME will go up and down, but the downstream product, just like you see the Novelis business, is a very steady stream of earnings. And we are trying to get Hindalco positioned more as a downstream value-added player.
I understand that, copper prices, they've gone up quite a bit, which does it quite bode well for your TC as well as RCs. What are your average TC RCs and how is the concentrate supply right now?
So they were saying the TCRC has been set for the year at 15.26 cents a pound. I think in the shorter term, what has happened is that the Chinese smelters have gone on maintenance. So the demand for concentrate has gone down. So the spot TCRCs have actually shot up to 15, 16 cents per pound. So I think that if you look at what is happening in Peru and Chile, both those countries are going through a little bit of turmoil for various reasons, strikes, government regulations. So the amount of copper concentrate coming to the market is also tight, which is why I think that, TCRCs are not going to go up in a hurry. They're going to be at current levels. And people are also anticipating the price of copper to stay at this $9,000, $10,000 a ton.
What sort of cost inflation did you see this particular quarter? And considering that your cost of production was still stable, what about this time? And how is it that Utkal's helped stable some of that inflationary impact? Also wanted to understand whether 37.5% is the peak for aluminum margins, you think?
So it's a good question. I mean, as I said last time as well, cost inflation is coming in. In Q4, we were relatively lucky. It went up only about 2%. In Q1, the costs have gone up by 4% compared to Q4. And coal prices went up 8%. CP coke went up by 25%. And our projection in Q2 is that the price is going to go up another 5%. Now, the margins are very high because the LME is going up at a much higher rate. So that's why we have been very fortunate to get these high EBITDA percentages. Like in Q1, it was 37.5. And in Q2, also the LME looks very strong. So we should be able to maintain that margin. But it is certainly a fact that the cost inflation is now coming in every quarter.
All right, let's talk about Novelis. Now, we understand that the US is facing a massive aluminum shortage because of which buyers are ready to shell out record premiums. Is this something that the Novelis business is, seeing? How would, Novelis and Aleris benefit from this?
Novelis Aleris is benefiting because as the regional premiums are going up, the benefit that they get from scrap is also going up. Because Novelis uses a lot of scrap, and scrap is priced as a percentage of LME plus premium. So that is how they are benefiting, but because they are a pass-through business. So higher aluminium prices do not really matter that much to Novelis. But because of the percentage of scrap they use, they're getting a benefit when LME is high and when premiums are high. So, which is why the Novelis EBITDA per ton is also, consistently above $500 per ton in the last few quarters.
Okay, understood. So it's scrap essentially that would benefit from that surge in regional premiums. Now, Automotive is a big client for Novelis, but unfortunately that sector is being hit due to shortages in semiconductor chips. Is that hitting Novelis's auto business?
It did. In Q1, Novelis was impacted in all three regions, but mostly North America by the chip shortage. But I think that, because of their product mix, because of the high demand in can, building and construction, they could offset it to a large extent and maintain their good margins and EBITDA per ton. But I think the good news that we are seeing is that Q2, the chip shortage will be better than Q1. And hopefully we are expecting in Q3 and Q4, the impact will be very minimal. So Q1 was in some ways the bottom of the cycle for us from a chip shortage point of view.
Sure. Also wanted to understand whether or not you're seeing a recovery in the aerospace division, both for Novelis as well as Aleris, and the contribution seen in the first quarter and what's expected going forward.
You're absolutely right. We are expecting aerospace shipments to be 10% above last year. Now, of course, last year was a very bad year, but in general, most of our customers, Airbus, Boeing, are starting to ship new planes again. So we are expecting the aerospace to recover, but to be honest, we think it will take a couple of years to get back to the pre-COVID levels. But yes, we are expecting this year's shipments to be 10% above last year.
Sure. Also, if you can give us an update on the capex, wanted to understand when the China project for Aleris is going to commence, whether or not you see any hiccups in there.
Not at all. I mean, I think we just announced it and we are expecting construction to start in a month. So 375 million, which was a part of the Aleris integration strategy. We're going to put a cold mill in the Aleris plant in Xinjiang that will allow us to backward integrate to our auto finishing line in Changzhou. So it will take about 24 to 30 months to finish the project. And we are expecting the synergies to be about 100 million. When we had done the acquisition, we had said that the synergies would be around 65 million. But now that we have done a detailed study, we think that we can get, because the auto demand in China is very strong. Extremely strong based on electric vehicles. So this project should give us 100 million synergy is what we are now expecting.
Satish, great to speak with you today. Thank you so much for taking the time out and highlighting how Hindalco's quarter gone by has been and what's likely forward.